Good morning, folks. It's election day tomorrow, so we're quite light on our positions, but let's go through them anyway. We don't have any stock positions, apart from a few names, one or two, nothing on the indices, but we do have some currency pairs and a couple of other things. Let's go through them quickly and see where we are. So on the dollar index, let's go back to our familiar old chart here. You can see we're now turning around at this point and following the red path rather than the top two purple ones, and just moving down now, performing an engulfing candle so far today. Today's only just started, so whether we'll end up like this or not, I don't know, but certainly reversing off that sort of surge on Friday, that dollar surge on Friday, upsetting a few markets, and with the jitters of the election coming up tomorrow, it's all a little bit up in the air. We've got to be super careful. If you are in some big positions right now, I suggest you trim them off or hedge them or something like that. We don't know what's going to happen tonight, tomorrow, and for the rest of this week. It's a very pivotal election in many people's minds, and some might call it seismic. Whether that's going to translate to the markets or not, I don't know, but naturally there will be some effect. The effect so far is that the dollar has weakened, and as a result, we've seen a surge a little bit in the euro and the pound. We're long on both of these, and let's have a look at the euro first. Bouncing off that support level, as we hoped it would. There's all the moving averages, the 50, the 20, and the 100 all below us. We've got the 200 above us. This is the 4-hour chart. Let's look at the day chart to see where we are in the bigger picture. And there we go. Just sort of bouncing off that support level, pivotal low. There are our positions. So one's out of the money and two are in the money. And just bouncing up there. My idea on the euro, as I said, is that we should see a breakout out of this range at some point. Look how long this range is, reflecting the dollar traveling sideways, well, almost 2 years now. So at some stage, this is going to resolve. It looks like a bull flag, strangely enough, although most people seem to think that the euro is going to weaken against the dollar, as is the pound, according to them. I'm not too sure about that. It's an incredibly long consolidation, but if anything, it's bullish rather than bearish. We've got a lot of faffing around in this range that we're trying to sort of swing trade in the interim, buying near the bottoms and selling near the tops. We're near the bottom of this range now, hence our longs, and that coordinates with this situation on the dollar index moving down underneath that support. For the same reason, we're long on the pound. Let's have a look at this quickly. Here's the day chart actually below us at the bottom here. Similar sort of idea, bouncing off that support. Our positions are there. We're slightly out of the money on that, not much now, but we don't have big positions on this currently. So we're just sort of waiting to see tentatively what's going to happen this coming week with the elections. So anyway, we have a long position there. We're short on the dollar yen too, and that's also following suit with the dollar index. Just retracing off that peak there, we have a short position from there, and trying to form this sort of rising wedge within this bigger picture of this rising channel, which we broke down, tried to retest once, down to the bottom here, down to these swing lows, back up to the underside and a retest. Now, that's where we are at the moment. We're still above the 200-day moving average and all the other ones too, so it's all up for grabs still. Perhaps this week we'll sort things out. Now, let's go across and have a look at stocks. I don't want to talk too much about stocks, very, very briefly, because I'm not trading this until probably next week. So a whole week without trading the NASDAQ or the S&P or the Dow or the German 40 or anything like that. But it does look like it's trying to top. Now, none of this makes any difference, this sort of technical pattern, in my opinion, when we have major market moving events. What could be bigger than a US election, and particularly this one? So I don't think we can read too much into this. It does look like it's trying to top. We're against the resistance level. We've got all of these angled rising channels and wedges and so on. We've got divergence on the stochastic and the RSI indicators, oscillators, so we'll wait and see. I don't think it's worth taking a position right now. This could swing either way, and I don't want to spend too much time on stocks. Gold, on the other hand, we're now flat on gold, but we've been trying to sort of take these short positions. We did take a short position, but we chickened out of that. I don't think we should be short gold going into an uncertain period like we are going into this week. So we're not short anymore. So I suppose very much like the stock market, this is all up for grabs, remembering that gold is a safe haven play a lot of the time. And if people get a lot of jitters about this election, we might see another surge in gold. We are long on Bitcoin for completely different reasons. This is mainly a structural or technical and fundamental play, and we're now holding above all of these levels. I want to zoom this into the day chart on Bitcoin just to show you why I think this looks so good. We broke out of this descending downward half diamond pattern top, and if we zoom in, you can see there's the breakout. It's this purple line I'm talking about, the thinner one. up to the all-time high, not quite getting there, pulling back, and now touching it and bouncing off with a reversal candle over the weekend at the 20-period moving average on the day chart. All looks quite constructive for me. My target remains 104,000 and maybe more. So we're still long on Bitcoin. We have loads of positions on there so far. We add a little bit more on that dip down over the weekend. I've also got a long position on Palladium and a long position on Platinum. I think Palladium, as we discussed in the previous video, is maybe a bit of a better play now with internal combustion engines, perhaps. And again, this election is going to make a big difference, perhaps making a comeback, and more demand for Palladium, which is using catalytic converters for internal combustion engine. If we get more interest back into internal combustion engines, if we go back into the 20th century, then we should see a resurgence in the demand for Palladium. However, right now, it's dipping back into support, and we may take another long position on this later on today. We'll see how that goes. But overall, nice smiley bottom on Palladium, and we see the same on Platinum, which we're also long on. And if you'd like to see some more of our ideas on this nice smiley face here, have a look at the couple of previous videos that I've covered on Platinum and other metals. And finally, we have nothing on silver at the moment. I know everyone's sort of bullish about silver, feeling really excited about it. I'm not too sure. It's an industrial metal mainly, and although it is used in a lot of electronic applications, which creates demand, there's also this idea that if we get a slowdown in the economy, we might see silver falling off a bit. We've seen the same in copper as well, and neither of these are looking particularly healthy, so I'm not sure what all the fuss is about. But for those silver bulls, you might be looking for a pullback down into these areas. I might consider taking a long position at this lower trend line and these order blocks and the 200-period moving average. Now that we've broken down through the steeper trend line, created a new trend line by making a new low there, I think maybe we could retest that again. So perhaps somewhere down at about $30, maybe $29.80, $29.50, something like that on silver. Let's go across to natural gas. Nothing much to add to my last video on Friday, which I will link directly at the end of this video. Let's have a look at the Henry Hub. A little bit of a weekend gap down, as you can see on this 4-hour chart, but only into the area which I described very carefully, the 2.5 level. We didn't quite get there. We got to 2.51, pretty close. But just a tiny gap down and then a sudden surge up and holding up quite well. If we look at this on the day chart, you can see that it all looks pretty constructive still. There's the 2.5 level, this big red line that or block that I've got drawn across, and we touched it perfectly. It wasn't actually perfectly 2.5, and I did point that out in the last video. I said somewhere between 2.5 and 2.55. That's where we got to, 2.51. We've now bounced up quite nicely, and look at all these moving averages stacked beneath us now. We've got the 200, the 100, the 50, and the 20 all still beneath us. We're trading still within this larger triangle pattern, and looking for this to break out through the top at some point, maybe allowing for a retracement even further down to 2.25. Look at this red line and look at where we are now. You can see we retraced exactly to where that red line is. I wouldn't say exactly, but pretty damn close. So we've now performed the requirement for this first red line a little early, but we're there now, so that's fine. And we're looking for the next move to move up. So what I can do is actually drag this across to where we are now, something like that, and just readjust my chart. And so that's what we're looking for now. Or alternatively, if we get back to the green area, the green path, we might squiggle along underneath for a bit as we retest underneath. Once again, we've got US elections coming up tomorrow. The US elections will not directly affect natural gas, but they will affect the price of the dollar against other currencies and commodities, no doubt. And so we need to be cognizant of that. But we are trading within this broader triangle pattern and looking for this to move down. So it's possible we could squiggle along underneath while, maybe even for the whole week, I suppose, while things settle down as the dollar finds its footing and the commodities markets start to make those adjustments and then eventually break out. Or we might have to see this sink right back down to the triangle bottom and the 2.25 level and the Fibonacci 618 fib, all that sort of thing. Lots and lots of support down there. But with a bit of luck, we'll hold here at the 2.51 level. So I've still got my long futures position from about 2.65. I'm looking to consider whether I should add some more during this week in the next day or two. And we've also got long positions on the continuous price here at Pepperstone. This is the 4-hour chart once again. You can see a little gap down over the weekend and bouncing up quite nicely. Let's look at this on the day chart. And once again, just to the bottom of that order block, and here's the 200-day moving average. And even though we dipped down below it, a weekend roll, we've bounced back and we're slightly above it right now. Back to the 4-hour chart, looking quite constructive, even though we've made a new low. There's still plenty of support below us, considering what's going on in the futures. And we've got the 78.6% Fibonacci down here at about 2.06. remembering this is a continuous price at Pepperstone, which bears no resemblance to the futures price at the Henry Hub. This is trading at 2.16, and the futures are trading at 2.6. We've also got short positions on WTI crude oil. Here's the chart. This is the 4-hour chart on WTI. Let's look at the day chart. You can see all of our short positions here stacking up. A couple of these we've taken profit. We did a bit of hedging here and there. Generally, we've been short most of the time, most of this year actually, starting back here in March and really ever since. Selling on rallies, exiting on dips, selling on rallies, exiting on dips. We're still now in the sell on rallies phase, having sold recently and waiting for this dip to continue down. I believe that we'll probably go below $60 quite soon, and then maybe down into the low 60s and even into the 50s. Once again, of course, this election is going to make all the difference to the energies market, considering that both sides of the equation in this political game are opposed to each other on energy policy. Let's go across to a couple of other things quite quickly. The US dollar against the South African rand. Still waiting for this to rally up into the blob underneath the breakout level. And you can see when we started selling this instrument over here, and we sold a bit more there, we got out of it, and we sort of faffed around here for a bit. But generally trying to build a short position here, despite all the sort of naysayers. I don't think this is a contrarian trade. Everyone thinks it's contrarian. I don't think so. I think the conditions might be good enough for the rand to gather some more strength. So I'm looking for a move back into the blob here, underneath this major breakout, and let's draw that in, something like that. This should be red, but I'm not going to bother to change it for time's sake. But that sort of thing I'm looking for. It's a major channel breakout on the weekly chart, and I expect we'll have to retest it. And then once we get there, decide what's going to happen next. I think we'll probably move back down to the bottom of the green channel, the much broader, longer-term channel. Same thing on the pound rand, that'll follow suit. VIX, we took profit just around about 21.5. We were long at 16. Don't know how that's going to go, related to the stock markets and the options markets and the hedging market, which will be very active this week, I imagine. All the hedging market maker type firms will be very busy. We're also long on TLT, despite its very droopy behavior. But generally, as we're holding above the supports, and particularly above 87.4, we'll continue to be long on this. I've got quite a decent position on this, and I don't really feel comfortable holding that size. It's not overtly large, but it's large enough for me to not really want to hold it into this coming week with the elections. Nevertheless, we're committed, but if it starts moving dramatically downwards, I'll just hedge this position straight away and wait to see what happens, ride out the volatility. Going across the softs and grains. Right, now we very quickly, I don't cover this much in these videos, but we're long on sugar, waiting for this bull flag to break out. We're long on soya, we took a new position on that. We have no positions on cocoa, waiting for this to rally up a little higher. I'd like to get back to the underside of this triangle on cocoa, or perhaps even back into the triangle, inside it, back to the downward sloping trend line, or even this yellow order block. Right now I don't have any positions. Difficult to trade cocoa because you require very large contract sizes with the futures, so we've got to be sort of super careful with that. We're also long on wheat. We're short on orange juice. We have nothing on coffee. I've given up on that for now. Not that we took any trades, but looking for trades. Not going to do that anymore at the moment. And then long on corn and long on cotton. So generally kind of long on commodities except for orange juice and cocoa. I'm looking to short both cocoa and orange juice. We're already short orange juice. But all the rest we're long. So generally I suppose we're long bullish on commodities overall. Folks, I hope you enjoyed that. Please be careful this week. If you enjoyed the video, give us a thumbs up and a subscribe if you can. It costs you nothing. And also there's a join button below here. For $1 a month you can join this channel and get access to all of these videos and special members perks and so on. And you can support the channel in that way. All right, take care. Have a great trading week if you can during this election cycle, and I'll see you soon.
Not gas kings, we trade for grace. We'll make a smile, lights up the place. Market swing, but we hold our base.